Where gold is currently trading at the moment, it is 1216.4. Our next guest is Egon von Gruytz, who is the founder of goldswitzerland.com. Egon, thank you very much indeed for joining us. I'm going to read your terrifying first paragraph of your latest report to our viewers. Clueless governments still don't understand that their ruinous actions have created a credit-infested and bankrupt world. They will continue to prescribe the same remedy that caused the problem in the first place, namely more credit and more printed money. The consequences are clear. This is the scary bit. Inflation, hyperinflation, economic and human misery, as well as social unrest. So we buy gold then, do we?
Yes, if you haven't bought it already, I hope you have, because gold has been going up for 10 years. We took the view already back in 2002 that the economy was not going to survive without some radical action by governments. So we advised investors in 2002 to buy up to 50% of their liquid assets of physical gold and store it outside the banking system. As you know, gold has gone up between 3 and 4 times at least, or even 5 times almost in dollars since then. We still believe that the real move is to come, because there are only 2 options. Continue the money printing, which we think is the preferred option that we see. It's not preferred from an economic point of view, but that is the only solution. The other solution is deflationary collapse.
To put it in context of where you think gold is going, you think it could go up to over $7,000, don't you?
Yes. 7,000, well...
6 times, you say?
6 times, yes. If you look at the inflation-adjusted price of gold compared to the 850 top in 1980, and if you adjust it for real inflation, not for the inflation published by governments, you come to something like $7,000. So that would be just a normal target. You know, obviously, you could say between 5 and 10. Markets always overshoot anyway. That would be a normal target with normal inflation. If you get hyperinflation, you can talk about totally different levels, of course. Gold is at this point not a bubble. It's not overbought. Most asset managers, pension funds, investors, individuals do not own gold today.
Egon, I have a tremendous amount of sympathy with your position, but I am troubled by the price action. It occurs to me that gold is in trouble at around $1,200 every time we get there. And we've had this spate of trying to take out convincingly $1,200, and it's failed each time, and we've sort of retreated back. What we've had over the last couple of weeks is probably the worst economic news one could imagine. The most turbulence we've had in equity and currency markets for years, and yet we are still only just over $1,200 an ounce. You make a very good point. Governments are running huge deficits and look bust in many senses on some metrics, but gold just has not convincingly demonstrated it will rally strongly in the face of this adversity. Investors are just not flocking to gold in the way one might expect, given the negative news flow that we've got. Why is that? Well,
markets don't move exactly when you want them to move, and you're impatient. I don't know if you're a buyer at 1220 or a seller. But if you look at gold over time, it's gone up 20–25% per annum in the last 10 years. Hedge funds always come in the paper market. We don't believe in the paper market. We think that will fail eventually. Paper gold market I'm talking about. And what happens is that you get this volatility and you get the major corrections. And 1220, yes, it's an important level. It will, in my view, very soon be broken, and you're going to shoot up probably $100 very quickly. So you know, you need the weak hands to be taken out of the market, and that's a good thing for a market. That's a sound market.
I mean, I buy it totally, or actually, to be honest about it, the only person in my family who has bought is my teenage son, who bought a whole lot of Krugerrands some 4 years ago, and as a result is the wealthiest member of our family. Yeah. But the problem... I knew you'd like that one, Steve. But the only question is, what is gold? I mean, in the days when gold was essentially the reserve currency, you could absolutely buy economic turmoil with why gold was important. The only problem I have with gold, by the way, I buy the argument, I don't know if it's 7,000, but actually as a short-term investment opportunity, keep on going, you know, fantastic. But what is it? I mean, at one level, it is no different from people who decide to invest in Monets, or someone who decides they want to, like Steve, acquire Aston Martins. I mean, this is, surely it is nothing more nor less than a luxury good, and that's the market for it.
It's a lot more. You know, gold reflects government's deceitful actions in destroying paper money. That's what gold does. At certain points, gold is a commodity. Right now, it's money. You cannot measure the value of paper money today, only relatively. So the euro is weak today. That means the dollar is strong. The dollar shouldn't be strong. The dollar will collapse very soon also. All currencies will go down. And you can only measure the value of currencies now against gold, because gold has an absolute value. You cannot print it, yes.
Pleasure speaking with you.
Okay.
Let's keep in touch. You keep coming back and telling us about
Right, yeah.
But it's good having you on the programme this morning.
Okay.
Egon joined us from goldswitzerland.com.